Hello to all of you, and I want to welcome you to Diversification 5.0. And for those of you who were live, well done to you, because we didn't hit record right in the beginning. So I'm just redoing the introduction for you quickly. There's always benefits to being live. You never know what nuggets, and they got some real pearlers that happened in the first couple of minutes of conversation. However, we do have the rest of the webinar recorded. And I wanted to just share with you, like we always do with any webinar, we would have engagement. And so we gave away days in education, free drinking water, and also we planted some trees. What is Diversification 5.0? Well, we've got Jan Vecheling in early May. We then went to Andrew Mobsby and Garth Wellman, etc., around the global economies. Today we're with Mark Robson. I'm doing a webinar in a couple of weeks with James Painter around currency diversification, and it's part of a much bigger campaign that we're going to be running over the next 12 months with a very large partner around diversification in general and what is actually happening. Where does it all come from? Well, Tony Robbins went out and interviewed 50 of the wealthiest people in the world, and these were the core concepts: don't lose money, asymmetric risk reward, tax efficiency, and diversification. And the one that he interviewed was a guy called Ray Dalio. And Ray Dalio has got a simple principle of investing in 15 different assets that are not correlated. And then you ultimately will reduce your risk by 80% and increase your risk return ratio by a factor of 5. Now, if you've got no idea what I'm talking about, don't worry about it. In simple terms, it's saying that you need to diversify across assets, across countries, across currencies, and across partners. He then had a TED talk, which
that's very different from the passive,
which I didn't play, and you can go and click on the link here and actually watch the TED talk. But what's important, he said, you need to diversify. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. Do not think that cash is a safe investment. Cash is almost always the worst investment. Think a little bit unconventionally, diversify well, be humble, don't market time, and be conscious of the dangers of cash. And I then introduced Mark. And one of the reasons I love, and love working with Mark is that Mark has spent over 20 years in the financial industry. He used to be a financial planner. And what he realized was that the way we taught, and the financial industry is, as we understand it and have been taught, doesn't actually work. And so he gave up his license so that he could actually, as he says, tell the truth. And he's now built a company called International Academy of Wealth. It's an education-based platform. There's hundreds of members from all over the world, and they basically come together. And he teaches everyone about the wealth pyramid. And what I love about him is he's completely authentic, and he very openly says that, the reason he gave up his license was so that he could tell the truth. The system is broken, not only the financial system, he went on to say, the education system, the political system. And he said, he asked people a question, what happens if this actually works? What happens if we try a new way of investing and you actually get to financial abundance or financial freedom? Like, what happens if this actually works? Because we've all been taught that it's not possible. And he spoke about how you can be location independent or financially independent. And, basically it all comes down to this wealth pyramid. And I started by saying, I was super intrigued by this wealth pyramid. I've been very, if I look at my diversification, I'm very, I've got my shares in the business and I've got, money invested in property, but I'm not actually diversified really across other asset classes, etc. And what I loved when I learned about Mark and what he was teaching was this foundational and wholesale assets, which is really what Wealth Migrate does. It helps people invest in these sectors. Our shareholders, would be at the ESI level, but there's actually all these other levels. And he goes out and he teaches people how to create that wealth mindset, how to create the wealth pyramid in terms of the overall process. And it was from there that we really pivoted into Mark and understanding his story. And my recommendation is that you watch the rest of this recording, and he will take you through how to build out this wealth pyramid, why diversification is so important, and how you diversify not just across countries, currencies, assets, and partners, but also across timelines and returns. And without further ado, I hand over to Mark. Cheers.
In terms of the how, right? And I know these numbers are pretty, and I'm going to go all over the shop, guys, in my prezzo, because I think it's going to work well. But I just wanted to share this spreadsheet. Now, this is one of our members, and basically they joined us probably about 3 years ago now, 3.5 years ago, did nothing for 6 months, right? They paid their $500 it was at the time per month, and we didn't hear from them. And then all of a sudden, they jumped on a coaching call. We showed them the pyramid properly. We showed them how to run through the spreadsheet. And within 18 months, they went from having 2 very good properties in Sydney, right? That's something I want you guys to understand, is they had gone through the old method of buy and hold forever. Negative gearing, if you know what that is here in Australia, is a massive thing. Whereas I've always looked at it and gone, why would you want to buy something that's losing money, right? Yeah, you can rely on capital growth, no issues there. But what if it doesn't happen, or if it doesn't happen in time for you to retire, right? I've had a number of, financial planning clients years and years ago when they bought property. If they were in the wrong market cycle, right, they actually had to work another 10 years to catch the next cycle. So you shouldn't rely on it, right? Is it going to happen? I believe it will in property, right? But you got to make sure you get those timings right, and the diversification in different markets. And I like what you guys do in different, not just different markets, but different countries and continents as well. But long story short, what they did, and we don't recommend that everybody sells everything, right? But they actually sold their 2 properties. They have then diversified it into the way that they wanted to build their portfolio. They are now on target to own 6 properties, which again wasn't possible with the types of 2 properties they had. So they couldn't even rip the equity out and carry on their portfolio. So they're on their target to hit 6 properties. More importantly, guys, this figure here is they actually have nearly $37,000 a month in income, right? Based on the different income strategies that they have in place now. And there's no way they could get that out of their old portfolio, right? Of a couple of properties and some superannuation. So this is all done in 18 months. So when you say, now this is the cool thing about these guys is, they're at that point now, what if this works? They have got 2 extremely, and I'm going to say cushy, right, government jobs. So quitting a government job in today's world is, almost like sacrilege, right? Why would you quit? Because you can't get fired from an Australian government job. So they've got like they've almost got their life set if they really wanted to. But they're at that point where they're making decisions now to actually go, you know what, we don't need our job anymore. What if this works? What are we going to do with our life? What are we going to do with Monday to Fridays? And that was what we spoke about just offline, right? What if this works? We've got a number of members who are financially independent now if they choose to. In fact, one member was very honest with himself. He said, Mark, I don't have enough hobbies to fill Monday to Friday yet. Hey, find some. So I'm
sure most people on this call, like that would be a nice problem to have to deal with,
Yeah, look, I really believe that while we think that's the case, when we drill down to it and we want, like one of the things we need when we're helping people build their portfolios, we need 2 data points, right? We need where they are now, but more importantly, we need where they want to be. And we find that people even get that part wrong. They'll go, oh, I need $100,000 to live, right? If I had 100 grand coming in, I'd be able to live my best life. And I always ask, have you actually costed out your best life first? Do the opposite. Like just work out and go, hey, if I was financially free in the next, for the next 12 months, what would I be doing with my life? What's it going to cost? Because a lot of people don't realize, but, and especially from here in Australia, right, to get to England as an example, business class is 30 grand, right? It's not a cheap exercise. One of our members is actually coming over for our base camp coming up in July from Cyprus, and it was $15,000 for the family business class. So depending on where you live, you might need more than that, to get to, it's only 5 grand if you economy, premium economy for 2 people is 15,000. Business is twice that. So you need to work out, if you're going to really want to fly around the world business versus economy, you're going to need more like $180,000 to $300,000. So most people don't know what their end number is because they haven't worked out what they're going to do with their time. Because even doing nothing costs money. Yeah. Like even going fishing costs money.
Especially if you play in the first world. You know, like I was, you know, just it blew me away when I was in London last year, and I'm sure you just experienced this, but like you basically can't step out the door without spending money. Like it doesn't matter what, like you turn left, you spend money, you turn right, you spend money. It's like,
oh man, look, I'll share this with you guys. It was hilarious. We shouted ourselves because we have money rules, and we shouted ourselves the last 2 nights in London in the Hilton, right? Now, it's a pretty swanky place on Park Lane. It's not the most expensive, but it wasn't bloody cheap either. But I love the quality of people you meet, right? I actually met a director in India, and he loved my tattoos that he wanted to put me in his Bollywood film as a Russian gangster. And I thought he was joking, but we actually caught up the next day and had a bit of a further chat about it. And he's going to talk to his casting director. I'm going, how cool is that?
I'm not sure we can have you on future webinars. I'm not sure if people are going to take you seriously as the Russian mobster, but I think it's flipping awesome. Talk about diversification across your life with your experiences. That's amazing.
Well, it was when he was chatting, I literally said to him, I said, mate, I would fly free just to have a part in a movie. Imagine being able to say that, right? I love the fact that I've been telling this story since it happened, right? And it was only 4 days ago. I went, I will clear my schedule. I am there.
You know what's interesting though, Mark? I'll add one extra thing to that. And I learned this from Dolph DeRoos. 2 things. One is that he used to say, you know, carry $1,000 around in your pocket. Okay. Like in your wallet, in your bag, whatever. Okay. And people go, well, what happens if I lose it? And he goes, well, classic. You know, there's the mindset of scarcity versus abundance, you know. And so that was the first thing he said, which I've always found intriguing. And you'd be surprised when it's useful to have a bit of cash lying around and, you know, on you. And the second thing he said, which I've always remembered, is go into, and if you can't afford to stay in a fancy hotel, just go in. Just go in and walk in the energy and just experience it and be part of it and whatever. So you've taken that to the next level, which is like not just go in, but actually hang around with it. And you know, it's the same as if you fly business class, you never know who you might meet, and all that type of stuff is, you know, I always joke, I want to be in the room where I'm the dumbest, poorest person in the room, because then I can only go up, you know. And most people put themselves in a situation where they're the wealthiest, cleverest person in the room, and there's only one way to go, you know.
Exactly. Exactly. So I just want to check in, guys. Has so far been useful?
As you're answering Mark in the chat box, please remember to put your E, your W, and your T so that we can add to our giving, please.
Yeah, we've got enough givings. I should ask. Cool. So I noticed a couple of our community members. I think if Paul's still on, he was there on last weekend in London, which is great. I think the key here, and like I said, guys, we've got this presentation already recorded, the longer version. So if you want it, please reach out to Lee to get a copy of that, or join their Wealth University if you're not a part of it, for sure. But the real key here, if you want to talk about diversification, is the 2 parts that I found the most important is to have a diversification in returns, and also your timeline. You want to start to stagger the timelines. So when we talk about things like foundational assets, you want to hold them forever, and you're trying to hold them forever, right? When you go into that investment, your goal is to never sell. Now you can, right? But your ultimate goal is to never sell. Yeah, and they will be giving you a return. But in terms of wholesale assets, and again, this is what I like about what you guys do, Scott, is you guys play a lot in this area because you generally have around a 5-year hold period, and you're looking for not just cash flow, but a bit of capital growth as well. So you've got that internal rate of return on your cash. And that's what a wholesale asset is, right? It's buying a quality asset at a discounted price, or you might have heard another term by buying, below fair market value. And that's the real key here. So when you're looking for timelines, you're looking to stagger these around the place. And even in things like shares and cryptocurrencies, right? You have staggered returns and you have staggered timelines. Like, this is one of my favorite opportunities that we got, right? When the whole debacle of March 2020 happened. Here's a company called Braemere Hotels and Resorts. And I thought I'd share this one because being Wealth Migrate, being in property, these guys own, some of the best buildings in the best cities around the world. They don't have the names, right? So they're not the Hiltons, but they actually rent out the buildings to people like the Hiltons, the Sheratons, the Intercontinentals, etc. And so these are in a what they call a real estate investment trust. And when you understand the rules, they have to actually give 90% of their taxable income, right? 90% of their taxable income to the unit holders. So when everyone thought that no one was ever going to go into a hotel again, right? Back in March last year, buying into this was only at $2.47. And because they had to still pay out their returns, we were now getting a 25% return, right? On our, this is like almost like your tenant paying you a 25% net return. Now that's phenomenal in any investment, let alone commercial property. So it was pretty good, right? And even just 9 months later, when everyone realized that they had oversold this, it got back up to $6. And at $6, they still were paying around a 10% dividend. So that's when you understand about, staggered timelines and staggered returns, you can start to really look at any type of asset class. And by, knowing this, you can start to have cash allocated to the different asset classes the way we do it. And then when opportunities turn up, you can just go, bang, I'm in, based on doing your own due diligence, based on doing your own research, your own money rules, right? And so on. And even things like an old company like GE, when you understood what was happening at the time, we picked this up at $6, not paying much of a dividend, right? But we knew there was, some good upswing for GE, and there was nearly doubled our money in 9 months. So that's the beauty of understanding about the diversification, right? And building your portfolio around different returns, different asset classes, different timelines. And that's what I really want the key or the message to go out through this session, especially being around diversification, asset classes, returns, and timelines. If you looked at those three as your diversification strategy, that's going to help you guys a lot when you start to, build your portfolio.
I love what you just said there, because it adds an extra component to it where you've got the asset class, and I've been copying Ray Dalio in countries, currencies, and assets, and you're now adding, I've spoken about partners, so let's say that's the fourth one, but you're actually adding 5 and 6, which is timeline and returns as well. Yeah,
without a doubt. Because when people go, I want to learn about cryptocurrency, a classic example, I go, cool, what part, Or I think the best one I hear when someone goes, I'm an expert in crypto, I go, no, you're not. No one's an expert in crypto, or if I'm, that's if I'm in, a bit of a direct sort of mood. If I'm in a nicer mood, I'll go, oh yeah, which niche? And if they go DeFi, I'll go, yep, what niche of DeFi? And then if they go, oh, I'm in blah, 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 I'll go, yeah, and what niche in that? Because there are so many layers to crypto in its own form, right? We can even bring in property when we go, oh, I'm an expert in tokenizing property. Oh, great. Okay. Which you can go down that, which property and which chain are you using? Who's this, who's that? To really truly understand it. And for you to be, chatting with you as much as we do, Scott, I love it, because mate, you're literally at the front of the wave when it came to tokenization of property, and no one can take that away from you. You are definitely an expert in that space.
Well, Yeah, thank you for that. I don't think anyone's an expert. It's better that I prefer the comment that my uncle says, which the one-eyed man can lead the blind. So you might just know a little bit more than the person next to you. But
that is true.
I think expert is a strong statement, because no one can be an expert in an evolving market that no one really knows anything about,
Yeah, especially when you don't know where it's going to end up, right?
Well, exactly. So tell me, Mark, if I was to take a step back now, and I've kind of got the theory. Tell us just a little bit about IAW as an example, okay? Because one of the things that I like about what you guys are doing is that we built the starter pack, and that's a way for people to get started within the property space and get going and invest in effectively what you've got there, the foundational or the wholesale assets, really. But at IAW, you guys are offering a higher level, if you want to call it that, around helping people build their portfolio construction. We don't proclaim, and never have been, to be financial advisors or to give people financial advice. And I know that you aren't necessarily giving people financial advice either. You're giving them the education. But I want to come back to the how. Let's use that family that sold their 2 houses in Sydney. Jill or Joe Soap is sitting here. What do they do? Okay, they get the theory. Now, what do they do? Okay, like how do they start to decide how much to put into crypto versus how much to put into property versus how much to put in the stock market? Whatever, you get my point.
Sure. Look, I think this is we're definitely in education. We don't do any advice at all. We do have coaches. But the way that we get people to get started is we get them to use this spreadsheet, right? And mine looks different to the ones that our members have, just in colors and stuff more than anything. But the first thing we do, and I know that this isn't quite about diversification, but I think it'll help get to the actual question. The first thing we do is we actually get them to score their financial house, right? So is that a bit better?
Yep.
So it's like we're massive believers in the universe, God, Buddha, whatever you guys believe in, right? So we talk about, like, why would the universe give you more money to be responsible with if you cannot handle what you currently have responsibly, right? So we believe, everything is around, energy and you attract like for like. So that's why I did, we love doing this, and you got to go around and go, right, okay, give yourself a score between 0 and 5. 5 means it's absolutely where it needs to be, and you're building your financial house. And we use the analogy of the 3 little pigs, right? Do you want your financial house to be made out of straws, sticks, or bricks? And the stronger your financial house is, when someone tries to attack you, right, you can literally laugh it off, right? Because you've got it so strong that people can't even blow it down. And that's what I like about it. And that's what we've built. Like even IAW, right? We've built it in a way that, if anyone tried to come after IAW, because we're only an education company, we can literally close it down and set up another company and carry on, because our IP is owned by a separate company that doesn't trade at all. So it can never be sued. Okay. So that's the beauty of it. So when someone wants to attack you, you go, well, how's your financial house? Is it made out of straws, sticks, or bricks? And you give yourself a score between 0 and 5, and just little things like, do you actually know where all your assets and liabilities are? And if you do, great, you put a 5. If you kind of do, you might put a 3 or a 4 or a 2. But whatever's not a 5, you should have an action step, and you should have a date that you're going to get it done by. And then when you've got all the actions you need to do, you've got to carve time out of your diary to get those actions done, because you can only fool the universe for so long, And I think our mate, I think it was Anthony Robbins, but I met it through, heard from one of his other coaches, but he talks about the feather brick truck theory, right? So basically, the universe will give you a little tickle if you need a bit of a course of correction. And if you don't listen to them, the universe will throw a brick at you. Right. And if you're still not listening, then along comes the truck. And I've seen it time and time again. Right. So you want to start going, get your financial house in order, but we find the energy around money and getting things more aligned and getting ready to be responsible for more money happens the minute you decide to, say, fill out the spreadsheet. But it's going to wane off if you don't actually do the actions that you need to do to build that strong financial house. Then the next part is to get this, like we said at the start, right? Get your financial independence spending plan, not the income. You have no idea how much income you need until you know what you're going to spend. So one of the exercises we get our members to do is just for the first year, right? When time and money is no issue, how will you spend your time? What will this cost to live life your way? And we already know, like our figures, everyone thinks it'll be millions of dollars, but we only need 186,000 to live life the way we want to. That's it. Some years it'll be 250, other years it'll be 120, depending on what we're doing. But when we first did this exercise many, many years ago, 186 came out to it. That's it. That's all we need. And not much has changed, except for instead of going to New York next year, guys, for 3 months, we're actually going to the UK, right? And we're going to spend about 5-6 months there. We've got the Ashes in July. So we want to go, that's a bucket list. And we might as well hang around the UK because we've got the Rugby World Cup in October, right? And I can tell everybody online now, if South Africa wins another time, our relationship is over. Because I can't handle Chad giving me crap for another 4 years. You're gone. So we're going to hang around and go to the Rugby World Cup, right? So this part in our actual part has changed, but the costing hasn't really. Because where we were going to stay in New York was going to cost us $25,000 for 3 months. We knew exactly, almost to the building where we were going to hang, right, for 3 months. So we know, like, get a target. That's the key. Then you got to know where your starting point is. So from all your cash flow, all your expenses. And this is pretty important, guys, because what the concept of this tab is to get your spending, your current spending habits from subconscious to conscious. And what we see now is we went from a cash society, right? We then went from cash to a card. We then went from having to put our card in the machine, remember? And then we had to go savings, check or credit. Remember those days? And then we had to enter our PIN. Then we went to tapping. And now everything's on phone. It's like we can be chatting away and we go, hang on a sec, we double click, we go tap and we're done. Or even our watches now. Right. So all of a sudden, and I have this saying that the banks have got us right where they've educated us, and they keep saying it's for our convenience, but it's not. What's happening is people are literally transferring their wealth subconsciously from them to another company. So this is why we want this to balance. We want all your income to balance what you put aside in your wealth accounts, savings, emergency accounts, plus all your expenses should come to the same amount, right? Including your taxes, et cetera, et cetera. And by getting this done, what we find is, you know, if you've got 180 grand coming in, but you can only find 120, where's the other 60, right? And we don't mind if you don't change your habits, but at least they go from subconscious to conscious when you find where that other 60 grand's going. But, excuse me. But what I found was when people realize where their money's going consciously, they change their habits, and all of a sudden they've got more money for savings and, more importantly, more money for investing, right? And that's the key. Like, I love the fact that our daughters, and I'll be brutally honest, guys, we are managing their portfolios at the moment. We don't want them to worry about that sort of stuff. But they know they've got a portfolio going. They know they've got their own 50 grand plan happening. They know they have to pay dad back the 50 grand, right? It's not a bloody gift. They have to pay that back first, then they can spend the money, right? That the portfolio makes.
Tell me, Mark, I mean, it's a good segue to my next question, to use your daughters, because one of the things that I find quite often is that, okay, great. So now I've started with what you've got here, like, where am I at? Okay. You've also said, where do I want to get to? Okay. And now you've spoken about, you know, building a wealth pyramid and diversification, etc. But what about if I don't trust myself? Like, yeah, to make the right decisions.
Look, there's two ways, right? I see this time and time again, especially when I was a financial planner. those that seek advice are seeking someone to blame, right? And those that are seeking education are seeking that responsibility. So you don't have to trust yourself in terms of every investment decision you make. Like, that's why you have, you know, partners and trusted partners that you can go to. Like, I have no idea which property to go buy in America or the UK or whatever. I would rather just utilize your platform and go, cool, next one comes up. Do I like it? Does it fit my money rules? Like, you've still got to have a certain amount of responsibility before you hand over the actual investment itself, but you still have to be responsible for the decision, right? And like, if I chucked money into anything, whether it's Cashbox or crypto or Wealth Migrate, if it doesn't work, it's my responsibility because I've made the decision to put it there. It's not yours. And this is where I think the world needs a big wake-up call. They're always looking for someone to blame, right? And this is why I always go back to that question, what if this works? Because this sounds weird, right? But people will be far more comfortable if it doesn't work, because then they can go back to their old friends and they will go, it's all right. And I'll give them big hugs and told you so's and all that rubbish that people, you know, feed off. And when you go around and you surround yourself with people that go, man, how cool is this? You know, the next base camps in UK, or, you know, the Coolangatta, or, you know, we're hanging out and having incredible conversations at 2 o'clock in the morning, right? That's the part that has the difference between it all, right? And you start to trust yourself when you take responsibility. Because I personally, the only reason why risk is there is because of the lack of education, right? If you don't know anything about property, it's risky. It should be risky because you've got no idea about it. Even if you've got no idea, like, I think the biggest risk right now is cash. Having money sitting in cash is the biggest risk we could have. And yet people think that I would be mad to say that. But to answer your question, to me, it's about using this part of the portfolio, because the biggest mistake I've seen people do, and this is what I see advisors do, right? They look for the strategy first rather than allocating capital to the different asset classes that will help them get to where they want to be, right? And then having a targeted return. So this is where one of the first things we do when members have their first coaching call, I actually get them to fill out this part of the spreadsheet themselves, even though they have no idea what types of strategies are possible and are out there for them to get access to. Because if you get used to that part, then you're not even worried about the strategy, and then you start directing the traffic, right? You then go, all right, I've allocated my everything. I've got 60% sitting in foundational assets or wholesale assets. I'm going to go talk to Wealth Migrate, because I'm out of that 35% I've got allocated there, I'm going to put 15% into their projects, as an example, right? And that's the beauty of it. Like, it can be that simple, and it takes away all the guesswork at the start of your journey. Does that make sense?
No, look, completely. I think, you know, it's something I learned a long time ago, is that people, you know, particularly in property, it's all about, I'll give you a good example. We were helping people buy houses in Australia, and it was amazing. You know, the best in those days, the best kind of houses to rent were 4-bedroom houses, you know, whatever, the Australian dream, if you want to call it that. And it was interesting because South Africans would always come, and the main bedroom was on the complete opposite side of the house, like, because Australians wanted to be away from their children. It's the best way to describe it. And the South African moms would be like, what? I can't be away from my children because of crime and whatever else. And like, people get very emotionally caught up in, is this a good deal or is this a good deal? And I was like, guys, you don't seem to get the point. You're never going to live in this house. Like, this is a box making you a return. And I think it resonates more with what you're trying to say here, is that, you know, people get really caught up in, you know, is this a good investment or is this a good investment? And, you know, my philosophy is, if you play that game, you're only ever going to get it wrong, because sometimes you're going to get it right and sometimes you're going to get it wrong. And the net sum game will probably be somewhere in the middle. Whereas if you've got a plan, if you've got you know, I call it a wealth plan, but a story, you know, as to what, then it's just, does each one of these investments fit into the plan? If that makes sense, you know?
Yeah, and I think
you call it money rules, to be exact, like.
Yeah, like money rules and that. But the other thing too, and this is something I've learned fairly recently, and it's probably the best thing I've heard about investing is, has the investment done its job, right? And this is especially around property. So what I mean by that is quite often in Australia, people become accidental property investors, right? They'll have their family home, they go to move into another house, you know, whether they're upgrading or whatever the case is. And if they don't or can't sell their old family home, they end up keeping it. And all of a sudden they're an accidental property investor, right? But even like recently, what happened was this good friend of ours and life member, he spoke about a couple who had their family home paid out in full. They bought another property and they were going to keep the family home as a rental. And Greg just turned around and said, mate, did the family home do its job? And they went, yep, raised our kids, all that sort of stuff. And they went, well, why don't you sell it? Because they got plenty of capital gain. They could have sold it, paid off the current property, you know, so live mortgage free and have some money left over. But because, you know, we're so tied up in keeping property here in Australia, they were looking at, you know, having a mortgage of, you know, $1.5 million and investment property making them $800 a week, you know. But because the investment had done its job, and this should go for everything, you know, did those shares do its job? Did you know, Cashbox do its job? Everything, if it's done its job, it has. Now, here's the funny thing: if it hasn't done its job, then you go, well, is it in the timeline? You know, has it done its job on the timeline? No, we've still got 3 years left. Okay, well, don't worry about it till 3 years from now. It hasn't hit its target. Okay, well, has it hit its target within the timeline? No, you know, we're past the timeline and still hasn't reached its target. Okay, well, then look at getting out of that investment because it didn't do its job, right? And that's where you can just make these little simple questions about investing. Has it done its job? Yes, great. Maybe it's time to get out. Or in your forever portfolio, the question could be, is it doing its job, right? Is it giving you that 7 to 10% per annum return year on, year out? Now, we've had an opportunity, guys, that has paid us 15% per annum year in, year out for 12 years, going for 18 years. It's only since COVID that it's stopped doing its job correctly. And we've decided to close it down. You know, we've decided to go, it's no longer in the foreseeable future able to do its job. So we're out, you know, 12 years, never missed a beat until COVID. Then it got late on its quarterly payments. And even though he's about to catch up on it, he turned around and said, it's probably still going to be volatile like this for the foreseeable future. So we've gone, cool. When you're paying back catch up, can you give us our capital back and we'll close it down? Now that was a hard call, but has it done its job? Yeah, it has. So it's credible, right?
Yeah, it's a really interesting philosophy. You know, one of the things I find fascinating about dealing with wealthy people is around the wealthy mindset. And what I mean by that is that, you know, again, I use the example of my uncle here, where I remember him selling our shares on like a Friday, and then they crashed on a Monday. And I was like, how the hell did you know like these gold shares were going to crash? And he was like, well, I'd rather take profit off the table than wait for the top, you know, of the market. And it's just a mindset, you know. But the other side of that mindset was the opposite. It was like, you know, my uncle's quite happy to take money off the table, even if he's made a loss, because it's like, well, if I leave it longer here, it's going to continue making worse of a loss, and it's not working for me. And it's just a mindset of abundance versus scarcity, in my opinion. You know, where what you're saying here is each one of them, has it done its job? Is it doing its job? You know, it's back to your money rules. You know, I've got one final. Sorry, Mark.
No, I just without a doubt.
I got one final question for you in terms of the breakdown, and even down to your money pyramid here. And I love the wealth pyramid that you've got on the screen here. How does someone allocate the percentage guideline? You know, like what happens if I come along and I say, right, I want, I don't know, 100% in financial assets as an example. And it's like, or is there some sort of guideline to break down as to what is a good way from a diversification perspective?
Yeah, look, it's probably the biggest question we get in our community about, you know, how do we build you know, are there templates and stuff? And look, we've built a couple of templates. One's called the 50 grand plan, which allows people to sort of take just 50 grand, and, you know, in 18 months, it can return sort of a $8,000 per month income, right? And that's something that people, because life is busy, we get that, you know, there's, you know, life is just gets in the way while we're busy making other plans, I think John Lennon said. And at the end of the day, we've got a couple there that are like, okay, if you follow these paint by numbers, this is the types of results you can get. What we find though is because everything is based on targeted returns and staggered timelines, the results are always going to be different based on that, because we have different opportunities that come and go in different areas, depending on what asset class and have you. And I truly think that if we turned around and started to give model portfolios, we're going into that realm of financial advice, right? Which we're not. We don't give advice at all. And we would go back to almost the traditional model. And that's the real concern I would have if we said, yeah, you know, if you're 35, you should put your money like, you know, invest it like this in the wealth pyramid. Yes, it would be different because of the model we do things to the old way, but it would eventually become the old way, if that makes sense. So what we would rather people do is just get used to allocating their capital first. Now, Billy and I, just so everyone's aware, and, you know, it doesn't mean it's right or wrong, but we've got no asset capital or no capital allocation in active trading or impact asset sector, purely because I don't want to learn to trade. I would much rather be riding my scooter, going to the beach, you know, spending 25 hours in a plane. Well, maybe not that last one, but the destination's better, but getting there is the pain, right? But I would rather be doing something else than trading. So there can be zeros here. So if I took $100,000, right? And the biggest thing here is if you truly know your two data points, where you want to be and where you are now, that should help you build out your own portfolio. And as you can see on here, guys, we've got tabs, right? Up so you can build it and forecast it out to 10 years, because this is what you should be looking to do with a portfolio, forecasting it out, you know, doing some what if scenarios, what if it only hits this, et cetera, et cetera. But just by understanding, going, you know what, I'm going to start with 100 grand. You might go, I've already got heaps of foundational assets, so I'm actually going to put none there. You know, you might go, wouldn't mind some wholesale, and you're going to target a 20% return. You know, you might do some stuff that, you know, we have access to here, targeted 20%, 120% return. Like, and again, this is the part that's always concerns me when I show this stuff, guys, is people start, you know, just copying this, right? And I go, this is just a scenario. It's not even real. We don't even know what our target is, et cetera, et cetera. I mean, we're about to get access to an opportunity that's been going for over 3 years. And literally, I'm getting these messages while I'm away going, just made 30% last night, right? And I'm going, what? Overnight, you know? And he goes, oh, it was something, and I'll actually screenshot it so you know I'm not lying. He goes, mate, I made 6 grand, and then scrapped that, made 11 grand, you know? And that was just on like a 25 grand account. So he's made, you know, good money. He's pulled a lot of money out. So he's now playing with the house's money. Not the right way to describe investing, but, you know, he's now risk-free, and it doesn't matter what happens to that opportunity. But those types of results in that one opportunity have been happening for over 3 years, you know, and we talk about trusted partners, the line of trust is pretty solid. So we're happy to have a good look at it. Other returns, things like this, and then you might do one more, and then we'll chuck something up here, earning, you know, aiming for the highest. So you don't, like, just with $100,000, if you build a portfolio like this, then you're looking at around 70 grand a year that it can bring in. So you don't need a lot of money. And I think the real key here is when you're diversifying, the last thing I just want to share is these two slides, guys, is you've got to look at, and we find when you're looking at your pyramid is, I truly believe the top half of the pyramid is what's going to help you get to financial freedom, right? Because all you need to become free is cash flow. That's it. But the difference between financial freedom and financial independence is education. And by understanding that, you then start to bring those, you know, all your excess cash flow from your portfolio down to build the solid foundations. And if you've already got a solid foundational base, right, then you can bring it back up and start building your freedom, your cash flow. So if you don't have a solid foundation, then sometimes you're better off actually staying at the top of the pyramid a bit longer, because that's what's going to get you free first, and then bring it down. And then the other way, we see a lot of property investors, traditional property investors, especially in the Western world, Scott, they just have to allocate just a little tweak of their current portfolio up into the top, and they would never have to work again. Like I've been speaking to members who are like net worth $5 million, still have to turn up on Monday, you know, net worth of $10 million, right? Because they've got all this property, no cash flow. And I go, sell one. Can't give you advice, but if you just sold one and took that cash and did this with it, you'd be on this. All right. And then it's that mindset thing, because all of a sudden we're now smashing their belief system. What if this works?
Yeah.
All right. It comes back to that one question. What if this works? What am I going to do? Am I going to have to actually talk to my wife every day? And I've actually spun that around, guys, because we've literally got one of our members' wife literally wants her husband to go back to work. In
Mark,
a nice,
I can tell you,
loving way.
I can tell you 2 weeks into Derek's sort of retirement, where he just retired from corporate life, not from doing his own businesses or whatever, I was going, no, this isn't going to work. And I work online all day, but I was going, oh no, you can't just pop into my little bubble for 5 minutes. So I hear her. I understand her.
Yeah. What if this works? I think out of everything, if people take that one thing away, I think that would be, you know, an hour worth spent with us.
No, I agree with you. Look, we are on the hour, and I really appreciate your time. And I know it's late in Sydney. I did want to just say, you know, one of the things that I appreciate is the online, you know, access to education and whatever. I know that Chad, yourself, and myself are looking to do a live event in South Africa at some point. You've just done one in London. I mean, we've got people all over the world as well. So, you know, we'll be trying to share that information, because there's nothing quite like the energy of being in a room, you know, in a full day session versus, you know, trying to jump on Zoom, whether this is at late at night or, you know, lunchtime or wherever people are. So I don't know, Mark, if you could just give me the 30-second pitch, but what does someone get if they come to like a full day workshop or whatever, whether it's 1 day, 2 days, whatever it is, you know?
Look, to me, it's all about connection. I've already seen people, you know, from our community, ones buddying up. They're already, you know, having their study buddies set up. You know, it's about that whole community and letting people know that you are part of a bigger community, that you can reach out to anyone in the world. We've got so much diversification in terms of skills, ideals, you know, and the biggest thing is, like, especially with the way that we do things, and as you know, like, we've only got one rule, right? No dickheads. And, you know, it's pretty, when you know you're on track with a decent community, when you can hang around for 10, 12, 20 hours and not run out of things to talk about, you know? So for me, to turning up live, it's about, you know, you might meet your next business partner. That's happened on a number of occasions. People have joint ventured into marketing companies. You know, one of them, you know, we're setting up an NFT company at the moment with one of our partners, and that all came through live events. There's nothing beats it, I believe.
Perfect. I want to, if anyone's got any questions, jump in. I know it's running late. I just want to kind of wrap up here quickly and just say to people, you know, in terms of diversification, a lot of people on our platform even say, you know, what do I do? And we literally created the Wealth Starter Pack, which is really simple for people. They get $100 into their wallet so they can actually get started. I mean, Mark's actually shared this with his whole community. They get the confidence of working with the team. They get a clarity, in terms of an investor roadmap, and takes them through and ultimately gets them to success. And we've now created a workshop, because we've again figured out, me included here, we're all too bloody busy. And so if we say we're going to go watch recordings, we don't actually do it. So we have a live workshop, and the next one is planned for the 6th of July. So if people want to participate in that, they can be taken on the journey through it. And if you want to go and read about it and look it all up, it's basically there. And it actually gives people the ability. It's very binary. Do I want to make a commitment and actually go on this journey, or don't I? I don't have to have big analysis paralysis in terms of the process. The second part is you can go to the platform. And one of the things that we haven't figured out, which I still want to do with Mark, is that we pretty much have wholesale assets and foundational assets, but whether it's real estate, structured notes, convertible debt, quarterly basket, which, you can actually just go on the platform and start investing now, literally from $10. And then if you want to speak with one of our team members, they can actually assist you. If you want to speak with one of Mark's team members, let us know, and we can also reach out, because the way that we're working is that our starter pack is really a get started. I don't know how to describe it. Let's call it, it's like being at school, and the IAW and the membership that Mark and them are offering is really for us going to be a step up when people are ready, if they want to go to that level. So we're working in synchronicity between the two, where people can get that in terms of it. And then finally, in terms of our business model, we've got two sides to it. We've got the B2C side, which is the wealth movement, the community, the education, and then finally the platform from an investment perspective. And then on the right-hand side, we've got, the B2B side. And what we have found quite interesting when you talk about community is that, for selected people, they actually want to be part of being a shareholder within the whole group and being part of the story. So again, reach out to us if that's a conversation. It's not for everybody, but for the right type of people, it actually fits their pyramid quite nicely. And we always say there's 3 reasons why people become members or shareholders. One is they invest for profit. 2 is they want to be part of a like-minded global community, which Mark's already kind of referred to. And 3 is they want to be part of both a profitable and purposeful endeavor. And I know one thing that Mark and I and Lee share, very closely, is that whole thing of the old system's broken. And, how do we be part of creating the new world where it's not about scarcity and it's not about the 1% having all the wealth and the 99% effectively being financially trapped. And, I can take and have taken people through this entire journey of what one looks at the different stages of a business and why our shareholders, participate, etc. But in conclusion, I wanted to sort of finish off and just have this up in terms of next steps if people want to reach out. I think, Mark, from my perspective, I just want to see if there's any questions here, but I wanted to give a quick summary before we go, to if there's any final questions, considering time, is that my takeaways from what you said was, and it's the one that I like the most, is what if this works? And then ultimately, how do I, think about being location independent as well as financially independent? I loved what you said about costing out your best life and actually knowing what that number is, not just, I want more money and someone chucks you $1. Your money rules and getting them into place. Diversification, and, it's probably, I know it's obvious, but I didn't necessarily have it even in my own context. It's not just about asset classes, countries, currencies, and partners, but it's about timelines and returns. Yep. And then my probably biggest personal takeaway was one that, not only for myself, but for a lot of people I'm sure online, was why would the universe give you more money if you can't look after what you have? And it's your whole thing of your financial house, straw, sticks and bricks. And I like the counter side to that, which was you can only fuel the universe for so long. It'll give you a feather to tickle you in the right direction. It'll give you a brick, or it'll give you a truck. And, I think that was really a good way of putting it. And also your context around trusting yourself. So you said, someone going to financial advisors looking to seek someone to blame versus an educator is where you're taking responsibility, for yourself. And I think that's a great way to end off. If people want to take responsibility for themselves, the purpose of this Wealth 5.0 webinar is to introduce partners like Mark to show people that there is a different way from the way that we've been, I don't know what I would call it, but brainwashed is probably the right word in terms of how we've been brainwashed into the current system. And what we wanted to show you today was not only the ability to have a different way of thinking, a way to get a different level of understanding and even education around diversification, and hopefully with platforms like ours, even the ability to actually invest and to create diversification. And my closing comment to you, Mark, is, and to everyone online, is, thank you very much for your time tonight. Deeply appreciate it after you've just landed on an airplane. And Lee, my closing comment to everyone else is, I think everyone should ponder today, what if this works?
What if this works?
Absolutely. I think that's going to be something that Scott and I are going to take into all our meetings that happen this afternoon and tomorrow as we plan for what we're doing in the next quarter. What if it works? I absolutely love that. Thank you, Mark and Scott, for making yourself available. I've gone through the comments and that there don't seem to be any other questions. If there are any, please do carry on and letting us know what is happening. So thank you for your gifting throughout our webinar. So just to let you know that we are going to be gifting 42 days of education. We're going to be planting 5 trees, and we're going to be given 8 clear drinking water to families in need. This will be added, and once a month we give it. So in our upcoming newsletters, please have a look for that. We will be sharing what our gifting stories are for that month. So thank you for being part of our community. So for all of those who were able to join us for what we're going to coin our lunch and learn session on the 1st of June, thank you so much. The impactful information that you shared. For those who want to know more about Mark and the International Academy of Wealth, please do reach out for me and I will put you in touch with his people. Anything that you want to know about us, please do let me know. And share this with everyone that you feel. Sorry.
Yeah, Lee, I was just saying there your contact details are if people want to reach out.
Yeah, if you want to reach out to me, there they are on the screen. I'm always available to our community. Please just note for wherever you are in the world that I sit in Costa Rica. So for most people, you send me a message and it takes me a little while, just simply because I'm probably still sleeping while you're eating your cornflakes, but I do get back to you. So please just be a little bit patient. But thank you for joining us and being a part of this series. Share it with those who you feel could add an impact to their lives. Let them know and start pondering about what if it works. I really appreciate everyone. Take care wherever you are in the world. Be blessed, and we look forward to seeing you on our next webinar. Thank you, everybody.
Cheers, everyone.
Hey, guys.